If you can master liquidity, spot it more easily, and understand how it actually works, you'll not only get a better win rate, but you'll get a better understanding and you'll get more confidence in trading the Forex markets. So let me explain to you what I actually mean with liquidity, and let's take you through a journey from beginner to advanced liquidity concepts. So what actually is liquidity? That is what we will be talking about in this video. And after this video, you'll understand liquidity a lot better. And a lot of gurus online are trying to make liquidity very hard to you, trying to create some difficult concepts to understand liquidity, but that's not all needed. Everything you will need will be in this video, and after this video, you'll just be able to spot liquidity more easily and you'll know how to adjust it. So what exactly is liquidity? So you need to understand that for every buyer in the market, there needs to be a seller. If you want to buy the market, you're taking orders from a seller. Very simply, otherwise there is no liquidity. You cannot execute your position. That's the reason that sometimes you take a position and you have your trade and price just came back and it just tapped you like this, like very shortly, and it moved to the upside. Your position wasn't filled because it might have just tapped it very shortly and there just weren't enough orders for you to buy. So every buyer is a seller, every seller needs a buyer. That's how liquidity works. That's how order flow works in the market. So that means for every winner in the market, there's naturally going to be a loser. So when you lose a trade, you're actually adding liquidity to the market. So quite simple. If we wanted to take a position right here and price goes to the downside, we are becoming the liquidity because our stop loss, these are basically orders. So these stops are being used to some people to buy the market again. So if we lose a trade, we're actually adding to liquidity. So that's why we need to understand fully where these losers are in the market. It sounds a bit harsh, but it's the truth. And this is basically how the markets work. Every time we are moving in one direction, the market is going to need to take out some orders, because if everybody is shorting, or in this example, we are moving bearish. If everybody is moving to the downside and shorting, there's not enough orders to move to the downside. So what needs to happen? We need to take out some liquidity. So in this example, very simple, there's going to be people who take a short position right here. So they'll take a position right here at this high. This is a very simple example. They'll take a short position to the downside like this. And on the next correction here, we have the same people going short. So these people are in the position, but if smart money, the bigger players, want to move in the market and they want to take a position right here, there's no sell orders in the market. So they need to find some losers in the market. They need to take out this liquidity in order to take up all these orders from the losers in the market, adding to the liquidity, and then have the move to the downside. So that's the basics of liquidity, but we'll move more in depth and you'll learn how to understand, to anticipate these things in order for you to take a position when liquidity is getting taken out and for you to take a winning position when the markets really want to make their move to the downside. So as you can already tell, liquidity is a problem for smart money and bigger players, not for us, the smaller traders, because just our small moves are not going to matter that much. Most of the time you're trading with prop firms and probably you'll just be trading demo and your move won't matter that much. But for the bigger players, this is going to be an issue. If they really want to make a large order placement in the market, they'll need to take out some orders. So it's quite important to understand that we don't really matter as retail traders, but we need to understand how these big players most likely will manipulate the market, or where they will look for an order to enter into the market. So basically, smart money is waiting in the market for you to lose. They're not, well, they might be manipulating, but they're just waiting for markets to push higher and higher, where they know a lot of people will get stop lossed, and there is where they have their orders pending, because they know these losses in the market are going to be added to the liquidity just to fulfill their large orders. So let's move into the charts and give you a little taste of how liquidity works. So it's not too hard to understand, and it's actually quite obvious. And actually, liquidity could be seen as trading the market's psychology in a way. So it is important for you to understand where people are buying, where people are selling. And let's just have a look at this little example. It's quite easy let's not go over too much, but you can see that we are we shifted to bullish. Well, here we had a clear reversal, we switched to the upside, and we can trade bullish. Now, what is happening? Let's just get into the mind of a big institutional player. So a couple of things, I'll make some notes right at the top. Get in the mind of a big institutional player. So if we look at this price, it's quite easy to understand that we want to move to the upside. Well, just using the basics, of course. And you need to understand where people are buying, where people are having FOMO, where they need to buy. For example, some people use a Fibonacci tool and they'll be buying here at the 6180 or whatever reason they have. Or they'll just say, oh, we have some structure, we have support and resistance right here. Well, you already, this is support, this is resistance, this is resistance, this is a institutional candle, this is support. Well, that's all bullshit, man. I mean, if you're trading like that and it works, fine. But to me, it's just bullshit. These are the levels where just regular retail trade. Well, I'm a retail trader too. But that is why a lot of traders fail, because they're buying at those levels. Support, resistance, oh, we have a tap right here, we have a strong candle right here, a very important candle, and we buy right here. So thank you, you'll be my liquidity, or you'll, even better, you'll be the liquidity for the bigger smart money player. So looking at this level, we can clearly see, you can see the bullish candle, so you know people are executing here. They're taking their buy order right here, and they are creating these sell stops. So here at this point, we have a sell stop, sell stop, sell stop, sell stop. So let's say a lot of people are entering here for whatever amount, 100 million, 200 million, doesn't really matter. And you are actually, you want to get in the mind of a big institutional player. So if you look at this chart, you'll have the mindset, well, if I want to move the market, a lot of people are buying already. So I won't have enough room to execute my position. There's not a lot of orders already in the market. So you know that there's orders getting filled underneath this price action. Here are some stop losses, stop losses, stop losses. So if we want to take a position, we'll just have to wait until we take out these stop losses right here. And as I said in the beginning, for every loser is adding liquidity to the market. So these losers, these stop losses, it sounds bad, right? Losers, but I mean, for everyone who is just losing in the market, they will be added to liquidity. And that liquidity is where the real orders of smart money are. And you can just look at these levels, like right here, we had some people buying already, but what happens? There's some stop losses, a lot of stop losses underneath it. And here at this level, you can see that smart money is entering. And most likely, smart money, the bigger players, took a position right here. They would have entered right here, and probably they will not allow their price to go to break even, but that's another video. But they'll just enter their position right here, and probably price is not going to go all the way back to this level, at least not to here. So if we want to take a position, we know we, for example, just want to see this liquidity. Of course, this is not enough. Let's wait a bit. You can see price is slowing down. You can see it's slowing down. Some orders, we are going lower and lower. And then at a certain point, you'll just understand, and you'll need to learn and understand this. So try it for yourself. You'll know, okay, now it's time for us to move to the upside, because we had some buyers here at the left, and you can see that these get taken out. So this could be a strong indication that we want to move to the upside. So if you would take a position right here, just put a position right here, doesn't really matter. You can just put your stop loss here, and you can target this high. And this is how you trade liquidity. Of course, you can still go a bit lower, but it already happened a couple of times. So you could already take a position right here, but you need to give your trade some space, of course. Very simple. I'm not going into lower time frames right here. We could still take a little lower pinch right here, and then we move to the upside. So let's see what price does. You see it goes a little bit lower, and it goes under here. And here is where all the orders, this is the golden zone, as I call it. It's not the golden zone, but I mean, this is the zone where the big players, smart money, are entering the market. So this are actually smart money traders. And then we can see what the market does. Moving to the upside, and we can keep playing this game. Just a very small example, and it happens all over. You can see people are buying here. People are buying. People are buying, people are buying. What happens? They get taken out. Here is where we have smart money entering. It happens on lower price action as well. Look at this. Here we have it. People buying, buying, buying. They get taken out. And here is where we have smart money entering. And that is just how the markets work. Until we can just keep doing this until the markets, of course, reverse. And where are we most likely to reverse? Well, we can play the opposite side. Here we have a high. what is most likely going to be above that. Some people took a short position here, so there's going to be some buy stops right here. So a lot of stop losses right there. So we can just move to the upside until we move to that point. So you can see stop losses are getting triggered, but if we remain bullish, it depends on what kind of price action you get. It doesn't really matter, but we get some short-term bearish reaction, but you can see that we are still yet too bullish and we don't move to the downside. And here we have some people buying still. There's a lot of momentum, they get taken out, and the smart players are entering here. Well, it seems a bit late to me. The real smart players to me, they're at the bottom right here. They're over here, and over here. And here is where they started potentially do their profit take. So moving on with the different concepts. So pay attention, because now we'll be moving from beginner to more advanced concepts. So as a beginner, you should know that the markets are moving. If we move to the downside, you can see that basically everywhere we have some orders, right? Like people are buying here, so they must have some stop loss. People are buying here, people are buying here, people are selling here, selling, buying. So, sorry. So there's a lot of stop losses above this high because all these people are short. There's a lot of stop losses below this low because people are buying. So quite easy to understand, basically. That's how I look at liquidity. Now, if you look at this example right here, I already prepared this. If we move a little bit forward, it should make sense to you that we have more liquidity above highs and lows in the market. So whenever we have highs and lows, we know there's a bit more stop losses above or underneath it. So that's the basic concept of liquidity. Every high and low in the market, and especially on higher time frames, when we have a 4-hour or a daily high or low, it's going to be stronger and it's going to have some more liquidity behind it. Now, if we want to move a bit more advanced, it's actually quite easy. We have equal highs and lows. It makes sense because we have one high is going to have a lot of liquidity behind it. Then we have a next high. If we have two highs or two lows or three highs and three lows, it's going to only get stronger because we are actually accumulating buy stops or sell stops, because a lot of people are buying or selling at that point. And if the markets don't want to move into the other direction, we can clearly see that the markets are accumulating and that we know that the markets aren't ready to make a move. So we can anticipate price moving lower or higher to take out these orders to create some losers in the market, and these losers will be added to the liquidity for you or smart money to take your position. Now, if we move a bit further, a bit more to the advanced side, we can have some, well, advanced concepts. I'm only using trend lines as an example, but you could use patterns as well, like head and shoulders. A lot of people see head and shoulders. You could use Fibonacci tools. You could see a lot of stuff. And if you want to move even more in depth into psychology of the markets, when something becomes a bit too clear to buy or to sell, you can tell that there's a lot of liquidity being generated. Like, for example, if everybody is yelling at you while Bitcoin is going up, yeah, then probably there's going to be some liquidity created, and you know this probably isn't the best time to buy or sell. Well, to buy, because nobody's going to be yelling at you to sell Bitcoin. They're only yelling it when they want to buy it, of course. So that's the basics from beginner to advanced liquidity concepts. So before we move into the market, let me give you an explanation, because liquidity concepts are an extra confluence. They should be seen as so. I know a lot of people who only trade liquidity, but for me, it works the best when we first understand market structure, when we have a clear zone, POI, we have some higher time frame confluence. Then we look at liquidity, and then we can look for an entry or a take profit. So this is the basics that you should do. And this is your most important one, because you can trade liquidity on a reversal, but to me, it works best when we are trading aligned with market structure. If you have a zone or a point of interest, if it's aligned with a higher time frame, point of interest, so this could be a higher time frame, that's quite important. And if we add liquidity to the equation right then, it's going to be a very strong opportunity. And then all you need to do is, okay, where are we most likely to move? We can determine our take profit, and we just need to look for a liquidity point that makes sense. Another little game that we'll do in the end is just trade psychology. When it's making too much sense to buy, we'll just put our stop loss behind it where normal people are buying, and we would execute a position, or we'll combine it in the exercise. So moving on, we have the same chart. Let's just rewind and just play back this downtrend. I think actually this is already quite a nice and interesting concept right here. So Starting with market structure, I'm not going to go into advanced market structure, but just basically looking at what price is doing, just very quickly, where I'm going to say I'm bearish. We already seen that the price was moving bearish, so we can just look at price right here. So already a lot of people are getting trapped right here because you can see that the markets are moving bullish, and a lot of people are buying the market here, buying the market here, buying the market here. This is something which is even more advanced, and we call it drawn liquidity, or you could just target this liquidity as a trade. It's not a nice trend line. You should connect it like this, and this is actually trend line liquidity, so this also could be a target. But then for the same, we could also look at liquidity like this. Now for me, there is where market structure is important, and we need to connect the dots. We need to find the edge in the market. So you can see that a lot of people are going short here. Look at price. So I'm just going to explain to you psychologically what I'm seeing in the market. Look at this. People are shorting. People are going long, but the markets aren't moving to the upside. So we know we need to take out some liquidity. We can target this, or we can target this, but most likely because we are moving bearish, for me, I would target these orders. It makes more sense. But in order to move to the downside, I need some people to lose first. Because if I would just take a position right here, it's not a refined entry. Where do I need to put my stop loss? Well, here. I think a lot of people actually do this. So if you're yelling at the screen, yes, I do this. Well, congrats, you learned something today. It doesn't make sense. What makes a bit more sense? You know that this is the point where a lot of stop losses, so we have all these orders right here, a lot of their stop losses are going to be above here. So just trading psychology alone and market structure, we can already just safely say this is our POI, and we could look for a position, let's say for example, just above here, and just take it right here and put your stop loss like this. This is very simple, but let's see what price does. So this is the first price. Takes a long time. What happens? We move to the upside. It gets tapped in. It's going to move one last time. You can see that the market is accumulating. So you see a lot of people want to go short. A lot of people want to go long. We know that the market structure, the bigger trend is bearish. Well, we cheated, but we can see that we're still kind of moving bearish. So we know there's still a lot more of accumulation. To me, this is just not enough. It's a very small point above it. So we still know there's a lot of orders here, stop loss orders not getting filled. So we know when that happens, we can expect a bigger move to the downside. Of course, here internally, we can see that there's a lot happening. We have some sweeps happening here. We have some sweeps happening here, but you can see there is no follow-up. We're moving to the upside, and you can see smart money potentially is entering here, but it doesn't make sense because smart money would only trade with the trend, of course, with the market structure. So it doesn't make sense to me. There's no real momentum coming in. So it means that we're just using this as internal liquidity, these levels, to move to this point. So let's see what happens, because we already saw we just move above it. You can see how beautifully it moves above it. And you can see we already planned this, that smart money was going to come in here. And you can tell that smart money is entering right here, taking all these stops. So you got to take in consideration short, 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 short. All these people are getting stopped out because we know this is equal highs, right? This is a high. These are highs. These are highs just before it. These are equal highs getting taken out. And this could be a strong position for you. This is actually a great position to take. You could look on lower time frames, look for an entry model. We're not going to go over entry models. And this is your first position. Now let's just think as we are a retail trader and we want to enter the position. So let's see what happens. Price is moving to the downside. We come back. A lot of people see, okay, we want to move to the downside. For example, I don't think they will trade here. So let's wait a bit higher. We don't even go higher. So you can see that a lot of people are already going short here with smaller stop losses, of course, like this. And you can see same story, equal highs. They get taken out right here. And you can find the next smart money area, this point right here. And these are strong levels because we know liquidity has been taken out. We know price won't come back. it already took out all this liquidity, and that is all that was needed to move to the downside. So continuing, here is where you could look for a position. Now you could wait for some traders to move in, wait for price to push above it, and look for an entry like this. So let's play price. What is happening? Exactly what I said. I didn't remember everything what happened. So this is happening. And here, potentially on lower time frames, you could look for a position. So let's see. It's quite aggressive, this entry. We put our stop right here. And we could still target this low. And this could be a position. Let's see if we can give it a bit more space. Doesn't really matter. We're just testing it. Well, you can see what happens. We are moving back to the upside. So I was wrong in this example. I'm not going to edit this, but I could have taken a trade right here. It would have made sense to me. But of course, I'm not zooming in on orders that get taken out right here. But what happens? We move all the way back to the upside again. Let's see what happens. And then we drop. So I actually, if I would have taken this trade, I would have been taken out. I wouldn't have expected this. So it's quite special to see. I wouldn't have thought that we would have still traded above this. Maybe if I looked a bit more in detail. But you can see that markets weren't ready, or there's still some people buying here. Who knows? We can look a bit more in detail what is happening here. But you can see that markets are moving to the downside, and we are slowly going to our target. Now, what is happening here? We can see this high right here happening like this. And we can say that we have some sellers coming into the market here, or potentially a trend line. But of course, we are already taking out some buyers. So at this point, we have to look at the other side as well. But I still believe we can move lower. So if we have all these stop loss right here, see the picture is getting clearer. If you look a bit more at the chart, it would be a real surprise to me if we still trade above this. Then I'll have to restart this whole video. I'm kidding. But it would make sense for me that a lot of people are trying to short here at this area. We move above it, and then we can have a move to the downside. So what happens? We move above it, and now we can look at price action. Still, I think it's not enough, but it's going to move already. Okay. But here you can see smart money entering again. To me, I wouldn't have liked this price action, but then again, maybe that's a good thing that I wouldn't like. If I would have looked here on the lower time frames, this actually looks quite good. You can see first orders get taken out. People are selling again. And internally, we can see, this is advanced stuff. We can see that we still have some smart money orders coming into the market right here. And you can clearly see those orders. You can see where smart money is entering the market. And if you want to look for a position, it would make, well, some people would look for a position right here. Well, we created a break of structure. So we are moving bearish. We have a supply zone right here. And I want to take my position. This is actually how liquidity is generated, because they say break, they want a retest, they'll put their stop loss right here, and we'll just do the little exercise. Of course, we already know, because I hope you are becoming a bit more advanced in this video. We already know that we are trading here, 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 here. And if we want to take a position, this is safe, this is safe, this is safe. Well, you're never safe in the markets, but this is the last point where it happened. So if we want to take a position, we know there's going to be stop losses. Where? Here. This is going to be our area where we have the most stops. So let's just take in consideration, and let's just find an entry. We just want to enter, for example, here. Put our entry right here at this last bullish candle. We want to see trades getting taken out. Of course, if something special happens like this and we get a strong reaction, we could trade right here, but this is just a quite easy trade idea, because all the traders that are shorting the market right here, we will use these stop losses right here for our next move to the downside. Of course, we can keep doing this until we have a target, but we already tapped this target right here. So be aware that we could change from trend. So I'm going to say that already. But if nothing happens, we could look for positions right there. Okay, what happens? We move farther to the downside, we get no entry, and now we have to reevaluate what is happening. Now we could potentially get a reversal. What is happening right here? We have some buyers getting into the market. What is happening? We create some lows, we sweep the lows, we move to the upside, we are leaving behind some buyers. Here were some buyers, small play, they get taken out. So we could, for example, move to the upside. Of course, reversals, they're not the strongest, but this is how you could think in the market. So let's say we have this, and now we can see, for example, people already buying again. So you have these buyers coming into the market. Is this a smart idea? No, I would want to wait, for example, for this to be taken out. And we could just think the same way. Retail traders buying, where do we want to, if we want to take a long position here, where do we want to look for a long? Well, potentially here, even under this low, because there's some stop losses here. So we want to look for a position potentially over there. So let's see what happens, but we move to the upside. What is happening now? We get some shorts in the market again, so it could be an indication that this is not going to move, so you would want to wait for some confirmation here. Let's see what happens. We get a strong reaction here, and potentially this still even takes out this one, so potentially we could have a nice opportunity right here. Let's see what happens. We have the same thing happening. We have some buyers going in here. They get taken out. It's not strong enough. They get taken out again, and potentially you could look for a long setup right here. So like this. And then we could target where? All the way above here. Or even here. Or even higher. And this is a trade you can take. Of course, you need some more confirmation, but we are still remaining bearish. To me, I think on lower time frames, the trade wasn't valid. Yeah, of course. Yeah. So this is happening. So if we look at the lower time frames, you can already see this happening. So you can see that smart money is entering the markets right here. So it wouldn't have been a good long position. Actually, it would have been a nice short position. But to me, we're actually fighting right here. I wouldn't have wanted to trade over there. But I'm just not editing this. I'm giving you straight how we look at the markets. It could have been that I went for a long position and that I was wrong because we had a strong sweep right here. But then again, you can see that smart money actually entered here. To me, this looks weird and fishy because I still believe we can move to these levels. So that was actually the reason why I would look for a long right here. And I still believe we can go to these levels. So let's see what happens. Right now, again, we get this low, take it out, and we potentially move to the upside. What is happening? Where's my camera? Where's my camera? So that was what I was looking for. See, I didn't edit this. I just kept going because I believe that we could still move to these regions. And what can happen? This is not a real smart money move to me, but here we could see something interesting. And that is how we plan it. And here we can see some orders. Of course, we are extremely bullish. So here we potentially change again. So this is just order flow, orders getting filled. You could take some shorts here, but to me, at this point, we're extremely bullish. I wouldn't instantly look for a long, for a short, sorry. I would again wait for price to come back here to take out. Oh, this is the example of the earlier exercise, and we would look for trades underneath here, and the circle is full, and this is how we trade. And then we can target. Where can we target? Let's remove this. We can look all the way for this level because we had all these smart money players, smart money players, smart money players. Smart money players, smart money players, smart money players. And here you can see the cycle has ended and we are moving potentially to the upside. We do the same smart money play. We wait for orders to get taken out. We execute right here. And then we can look for a higher target. We get tapped in. We get our first reaction. And then we potentially can, this is a really big swing trade, but potentially you could look for something like this. Look for this higher target. There might be some orders there. A lot of smart money people are going to be executing their take profit right here. And this is how you could look at the market. I'm not sure what happens right now. Let's just put it on the 4 hour. And we can just look at this higher target right here. Not sure if we go there, but it would make... I didn't prepare this. I didn't prepare this. It's just wonderful to see how this works out. But you see, I can be wrong sometimes, but the magic is really there. That's the beauty of liquidity concepts. This is actually insane. And you can see orders immediately kick in above here. And that's the beauty of how it works. I just want to see what happens next. Wow. Insane. What happens? Stop losses get triggered. Puff, and we fall to the downside again. Very nice, very nice. And you can see in the end, this is internal play, this is external play right here. And you can see external plays happening just to move the trend to the downsides. Wonderful. This is why I love trading. And this is why I love sharing these things with you, so you learn, so you can use these concepts. And I truly hope that you learned a lot about this. I took a lot of time to create this video. Leave behind in the comments if you like this video. I truly appreciate if you watched it to the end, and if you learned something, or if you just watched it again and you were like, oh, I forgot about this. Comment in the comments that you watched the video till the end, and then I'll see you in the next video. If you want something in this channel, just ask in the comments as well, and I'll make a video about it. If you want to join our beautiful community, Resolute Trading, there is a link in the bio. If you want to partner with, I partner with FXIFY. If you want to buy your challenge with them, I have a 10% discount code. It's also in the bio. And I hope you, most of all, enjoyed this video, and I'll see you in the next video. Bye-bye.